Welcome to Direct Credit Funding Podcast. This is episode 3. All right, Jason, you asked the people for questions and I pulled my favorite question out because I'm very curious about this. How do you determine loan amounts?
Oh, that's a very good question. So before Jason starts, I'm actually going to start him off with another question. When we are determining loans, what type of loan they're going to get, there's a certain key terms that we like to go off of, right? One of the main things that we tell people when they come to us is that we can get you an app-only loan up to $500,000. So I think when it comes to understanding what they're applying for, we should start there. Can you quickly describe to them what does it mean to be app-only on a loan and what that amount means?
I can. That I can do. Application only means that we are not looking for or asking for what we consider bank financial information. We don't have to have their tax returns. We don't have to have their firstborn child and their personal financial statement. We have to make sure they cash flow, right? There's cute babies out there. We are looking at the person's, and this is for the space between $10,000. We're looking between $10,000 and $500,000. We are looking at their time in business, the equipment that they're buying, how long they've been in business, their personal credit score, their business credit score from multiple places, their other reports that get ran and industry trade lines, Dun & Bradstreet, some of them, Moody's, depending on the size of your company, et cetera.
Why does this matter to them?
It matters because a small business can't go to the bank. Most small businesses in this app-only market need some quick money, quick, fast. They need a new bulldozer because they've got a new contractor that they've been hired to do a job for. They need a new man lift. They need a new x-ray machine in the hospital, whatever that may be.
For me, as someone who is new to this industry, when I started understanding what app-only meant and why it would benefit a business, it was really fascinating to me because in mortgages and car loans, right, we're looking at, well, how much money do you make? And how much are you going to be able to pay back? Those are important things to know.
Right.
But for an app only, what we're looking at is what is the health of your business. If you have a healthy business and you can provide to us your social and your credit and how long you've been in business, we're not going to ask you to provide your tax returns or your bank statements, like you said. We're going to go off of this is a healthy business that's been sustainable for a long time. Yeah, it's worth the risk. So we can approve this loan much more quickly based off of you being a good business owner. And that benefits almost everyone, right? You could have been coming out of a winter delay. You could have been coming out of a slow year. You could have a piece of equipment that's broken that has impacted your last 30 or 60 days of business, and it's not going to impact your ability to get the loan. And I think that's one of the really cool things that we have to offer is we can, like you said, go from $10,000 up to $500,000 on just an application.
Yeah.
Phenomenal.
And think of what you can do with that money to grow your business. You can leverage, you have access to that much capital for you to take the business and the risk to take your business to the next level. What are some of the other key terms that are industry standards that you think should be discussed?
Well, I think that when we're talking about determining how much money, like this question is specifically like, how do you determine how much money someone should take, right? What is it that you need? And even though we're not looking at your banks and your financials,
your credit and your pay history
is going to determine what. So one of the things that we talked about in the first 2 episodes was keeping your money in hand, financing a piece of equipment so that you build your credit so you have more ability to borrow later. When we are determining how much money we can get you, what we look at is not revolving loans that you've had before, not mortgages, but what kind of installment loans have you had and to what amount. So if we're looking at your credit history and you've had a loan amount of $70,000 in the past that you paid off incrementally each month, that's called an installment loan. That $70,000 we can then take and double up to $140,000. That's what we can determine your loan amount on, right? So
yes, but let's get into some base factors. If you're a 2-year-old business, you're only going to
Before we get there, let's talk about why so the important part is building that credit, taking out installment loans. Like when we're talking to people about like, why am I going to fund a loan? This is why. It frees up your ability to borrow more in the future for everything new investment that you need. So if you've taken out a $50,000 loan, we can get you $100,000. You then go and double that. You now have had a $100,000 loan 2 years down the road. We can then take that $100,000 and get you $200,000. So every time you do a bigger loan, that determines the loan amount that you can get in the future.
Right.
So yes, your time in business goes into
credit parameters though.
There are
parameters. If you've a bankruptcy, recent bankruptcy is probably going to get a little less money or a higher rate than other folks. There are some qualifying factors in there.
There are. That all goes into that app only factor, right? We're looking at your overall credit, and we're going to determine what your app only amount can be. We're looking at 100,000, 200,000. That is really what determines the loan amount itself. Now, if you're a new business, you've got 2 years in business, you've taken out a $50,000 loan in the past, and you're needing a $250,000 piece of equipment, that might not be the most realistic thing that we can do for you. So we're going to help you determine what that actual loan amount is going to look like to get you into the equipment that you need to build that future.
Thank you, Brooke. That was great information.
Sure.
You're so right on that. Please keep your questions coming. We love your questions. The more questions, the better, because we try and fit as many as we can on the air, right?
There's clearly a lot more we could talk about on this, so stay tuned for the next session where we go a little bit deeper and bring more information to you.
Find us on all of the socials and at directcreditfunding.com.